Hi, this is Katie at askSlim. Our Level 4 Plus members enjoy the benefit of being able to request analysis on two symbols of their choice each week, and one of the requested symbols this week was Baker Hughes. This is an energy sector company and has been moving up lately along with the whole group. What we're looking at here is the weekly chart of Baker Hughes for approximately the last 3 years. The weekly cycles are an average of 30 bars in length, and that's shown with the black cycle brackets on the bottom. The red dashed cycle bracket is an overlay of the crude oil cycle, and it's interesting to study how price reacts to the interplay of those cycles. Back here in the summer of 2019, the Baker Hughes cycle was early in a rising phase, but the crude oil cycle was pushing down. And so we ended up getting this pennant formation right here. Only after the crude oil cycle bottomed and started to move up in its own rising phase was Baker Hughes really able to get going on the upside. In these next two cycles, we had both Baker Hughes and the crude oil cycle moving up together, and you can see that that gave us some nice upside moves. This cycle is very interesting because Baker Hughes had formed its bottom and started to move up early in the rising phase of its cycle, but notice that the crude oil cycle peaked and was pushing down, and we got this big decline in Baker Hughes. It's an unusual formation because the decline took us almost back to the cycle low support and then bounced all the way back up and took out that high by a little bit before we got this bearish engulfing that marked the high of that cycle and took us down into the cycle bottom. Now we are in the rising phase of this latest cycle, and you'll notice that the crude oil cycle is in a declining phase. However, as Slim mentioned yesterday in the Future Speak show, crude oil has been so strong and really not wanting to pull back. So if we do get a pullback over the next week or two down into the supports, it might set up a good long side opportunity in Baker Hughes as well as many of the other energy sector stocks. As long as Baker Hughes does not retrace down below this support zone, we would expect the next move higher to take us up into this target zone between the 78.6% and 100% fib extensions between about 29.5 and 31.5 before we turn down and expect the next cycle low out in late spring, early summer, May 23rd to July 8th. A word about momentum. On our weekly charts, we use the reversal scout as a momentum indicator. That's this green and purple ribbon that you see running through the chart. Notice how the reversal scout turns green just after each of these cycle lows, and then turns purple and warns you at the top of these declines. Currently, we have a green reversal scout with a good upward slope, so we like to watch that for any sign of changing conditions. But right now, Baker Hughes and the energy sector looking strong. Thank you for listening. Have a great day.